Okay, recording this video. It is Sunday, 7th of February 2016. It's about 4:30 a.m. Chicago time, 9:30 p.m. here in Sydney, Australia. Hope you're having a good weekend. And I wanted to put out a video this weekend because the little reversal that I saw on the E-mini on Wednesday, and I put out a video after Wednesday's trade, has not worked out. It has not got confirmation. If you go back to the video, these are the two bars that I was talking about, kind of a U-turn bar, where we were testing into the lows and we had a big sell-off on Wednesday's trade, the first half of the morning, and then the market tested and then rallied back up, and we had a strong bar. Didn't close above the high of that bar, but it was a nice kind of rally, strong rally bar back. And I was saying at the time that that looked like a two-bar kind of little sequence that was a nice for a reversal, but that we would need to break and hold above 1940 to get confirmation. So what happened on Thursday was pretty much nothing. We almost had a doji bar. When you look at it on the daily charts, the open and the close was very similar. Had a little bit of range on either side, but didn't kind of go anywhere. Everybody was waiting for the employment numbers that came out on Friday. And when they came out on Friday, we had a sell down. We had quite a lot of volatility when the numbers kind of came out pre-open, but as soon as the volatility was out, it's just kind of sold down all day, and we had a strong down day. So the result of that is that, yeah, we've put in a pullback to dirty end of trend here on the 135-minute chart on better sine wave. But this kind of strong, what I thought was going to be a strong pattern that we would continue. What I was hoping was the employment numbers would be the catalyst that would drive us above the 1940 and keep us above there, and that would signal the kind of this rally was on its way and confirmed. But we've come back down to this 1870 level, 1865 at the low on Friday, and we are just sitting on an absolute knife edge. I want to show you this on a whole bunch of better sine wave charts which print the support levels. And I'm just going to show you just from the 9-minute chart kind of onwards. These are the time frames that, I mean, I don't use this during the day, but when I want to zero in and see what was actually going on when I'm looking at minute charts, these are the numbers that I'm using are 5, 9, 15, 27, 45, 81, 135, and then daily. The reason for these, some of these numbers are a bit odd, 27 minutes for example, but there's an equal number of 27-minute bars, an absolute number of 27-minute bars during the day. So I know there are 5 81-minute bars and 9 45-minute bars, but in my head I can't do the division. 405 divided by 27, whatever number of bars, 27-minute bars during the day. But anyway, so on the daily, on the 9-minute chart, for example, we broke support on Friday. This is the open of trade on Friday, and we're below support here, so we're in a trending move, about to make pullback to end of trend on the 9-minute chart. On the next time frame up, the 15-minute chart, here's this support, 1875. It's kind of a number that you'll see on a whole bunch of these charts, and we busted through there, and we're holding back at 1875 here at the close for the day. So, you know, this is a really important kind of support level. 15-27 minute chart, here's the same deal. That same price point, I think it is 1874 basically, for a support there, and we've closed up above it fractionally, but we did bust through it. We're sitting at that support level there on the 27. On the 45-minute chart, look at this, same deal. Supports at 74.75, same price point, and we're just sitting at that for the close for the day. And 81-minute chart, it's not signaled as a support level. We've got that cross happening at the moment, so at some point that will signal a support level there on the 81-minute chart. The 135 I've shown you, we're at that 73.50 on this chart. It's kind of the key number, which is interesting because it was playing off a different bar on a different day than those other time frames, but it's exactly the same support level. And on the daily chart, we're below the support level here. And I was initially okay with a spike below this because we were being held by support on the weekly chart that we've got there. The point of showing all of this is this support level at kind of 75 on all of these charts, and we're at 75 at the close, is that support level absolutely has to hold. The beauty when you see support levels coming up on a whole bunch of charts kind of simultaneously is they end up being strong moves from that support level. If the support level breaks, we'll get a strong move because there's nothing to hold us on the way down. There's no cyclical support to come in and hold the move on the way down. All of those time frames all of a sudden break into trending moves. On the way up, if we have cyclical support on all of those time frames simultaneously and they all hold simultaneously, again, there's no resistance on the way up until the smaller time frames start to show resistance patterns as we make our way. So when you have multiple support levels coming in all at the same time, the move either way, up or down, is going to be a strong move. So because this was a failed reversal here, as I see it, based on Wednesday's trade, and that the number was not liked by the market, the employment number on Friday, and we kind of closed down. A lot of people may be kind of reassessing the strength of the economy, whether the Fed did the right thing raising rates last time around. Maybe it's time to take profits, and we have seen this spike in the Japanese yen that I'm still trying to figure out what the capital flows are. At the time when I was looking at it on Wednesday, and I was saying I was kind of starting to get bullish on equities, bullish on bonds, and yet the US dollar was going down. That didn't sound as like the right combination. But if the yen's going up, we've got carry trades being triggered, and all of a sudden the equities market is weak, and so there could be margin calls and so on, and continuing to trigger that carry trade and leading to equity weakness. So we're on a knife edge basically at this 1870 level. So look for that on the open on Sunday evening and just see where's that kind of travels. At the moment, if I show you the highest time frame tip bar chart, the 4500 tip bar chart with these multiple time frames. So just show you this. So this was Friday's pattern. This was Thursday's activity, and this was Wednesday's activity. And you can see on Wednesday's activity how we put in, these nice support levels here after exhaustion, sell, bullish divergence, and flush going on. That was all very nice. And then we have all of these blue professional bars coming in at the low. Then this one here, we have kind of amateur bars down here, and then we have blue professional bars buying the breakout, kind of trading, assuming this is kind of a reversal day and we're kind of heading higher. But then on Thursday's activity, we basically just did nothing, and it was a big kind of doji day, kind of a lot of uncertainty. And then as soon as Friday's kind of activity came in, we broke through these supports, an important support here on the highest time frame, the intermediate time frame, and all of a sudden we've got this weakness going on. Now at the moment, yes, we do have exhaustion sell patterns on our left shoulder. We have pullback to end of trend gone off nicely on the intermediate time frame. So we've got some reasons for some support coming in there at around the 1870 level, but we've still got to play out pullback to end of trend on this highest time frame because we've broken into a trend move on that highest time frame. So let's see where that goes. In terms of the blue professional bars, where did they pick it up on this highest time frame here? During Friday's activity? Well, that little sequence there was basically selling the breakdown at that level because we kept on going through the lows of that. We had a little bit of profit taking here because we bounced and we kept above the high of that blue professional bar, and then we've got a whole bunch of activity at the end of the day. Difficult, it's on a Friday, it's the end of the day, so they're closing out positions, getting square and so on. There was quite a bit of leftover short positions after Friday's activity that are being held over the weekend. With the E-mini, it's a day trading vehicle. There's not a lot of kind of long-term holding of positions of the E-mini overnight, and in terms of total open interest or number of contracts traded, it was only about, I think, 2.5% or something like that of the total contracts traded during the day. So it wasn't a super big number, but it was kind of held over kind of short from Friday's activity, maybe hoping for a continuation of the sell-off on the weekend or Sunday evening into Monday. So I'm just a little, with this pattern where we bounced off here before, we've come back, it was weak, we're in a downtrend here, we've got to go see pullback end of trend on this highest time frame here. And I'm not a particular fan of this number being hit 3 times over the last several days. This low at 1865 here, you can see if I can move this bar down here to 1865-ish, kind of around here. So we hit it on the close on Friday, we hit it at the bottom on that Wednesday, and then a few days prior to that it was also kind of an area that we had, well, an amateur down bar and then an exhaustion sell bar into there. We've hit that number quite a few times, and it just looks as a dangerous kind of level that we could easily kind of topple over and get a continuation of this downtrend. But as I said, 1870, 1875, it's all these support levels on all these time frames kind of come up together, so we'll get a strongish move from here. Kind of watch what happens on Sunday evening into Monday, and it'll be a big move. I'm just wondering if it's going to be a bit of a collapse, but we'll have to just wait and see. Just while I've got you on this video, I don't normally do this, talk about kind of equity or ETF opportunities, kind of medium long-term opportunities. Equities is weak at the moment, and we could be looking at a little bit of a continuation of this weakness, a sell-off kind of starting back again on Sunday, Monday. But one of the areas where we are actually starting to see some strength is in the gold mining sector, because we've had gold and silver rally pretty strongly over the last several days and weeks. And the gold miners is an area where it's just been down for a long time, and the gold bugs have been talking about fantastic opportunity all the way down. They've been saying it's a great opportunity to buy the gold miners because they've been sold off so heavily, and you can see that's what's happened. We've at these highs at 55 or whatever the previous high in there, but we've kind of collapsed down into 1244 as the support level here. Finally, we've got some real exhaustion sell, bullish divergence, flush patterns kind of coming in here at the support level, and you can see that the trending system has started to break into an uptrend at this point here. Around these kind of support levels, we had a low risk entry point kind of go on here, and we've had a really cracking rally over the last several days in terms of this. So a little pullback in this might be interesting for a medium to long term kind of position going on. So although the general equities market might look weak, there are actually a couple of areas where there's some interesting things kind of going on. The more driven out of what's happening in the commodities complex than equity stuff, and these guys have been super sold off. The dividend yield on these things is in the teens at the moment, which is extraordinary. Anyway, so just look out for that open on Sunday into Monday. So let's just see what happens, whether we get this knife edge 1870, get some kind of resolution one way or the other.